Now we are going to discuss about Indian financial system. Always a system indicates the systematic flow, okay, of finances. So that's the reason here it is called financial system. As it belongs to our country, we'll consider it as Indian financial system. So Indian financial system is an organized body which will help us to move the finances from surplus to deficit. In simple sense, Indian financial system facilitates the movement of funds or mobilization of funds from surplus to deficit, and in turn the deficit will give us goods and services. So usually the surplus of funds is with households, and those who have deficit of funds are corporates or the manufacturing sector or the organizations which are providing us goods or services, and the government which will help us in developing the infrastructure of the state or center. Okay, so Indian financial system facilitates the movement of funds from surplus to deficit, and from deficit we'll get goods and services. So this is the major task of Indian financial system. Now let us see the components of Indian financial system. Indian financial system is basically divided into two. One is organized sector and another one is unorganized sector. Organized sector is further divided into 5 major components. One is financial services, then financial markets, next financial institutions, financial instruments, and financial intermediaries. Financial intermediaries. So financial services are in turn divided into two. One is fund-based services and another one is fee-based service. If a service is provided involving the fund, means the financial intermediary is providing you some help in the form of fund, like leasing, hire purchase, okay, all these they'll come under fund-based services. Means he is giving you a product on lease, land on lease, building on lease. So it's a fund-based service. Example, I am taking it as leasing, hire purchase, etc. When it comes to fee-based service, he is giving advisory services by taking some free or charging some free, a fee from the investor. All the merchant banking activities related to a registrar, debenture trustee, advisory or trading services, all these they'll come under fee-based services. So fund-based services and fee-based services. Then financial markets. So financial markets are divided into many types, but here we learn mostly about two markets. One is money market and another one is capital market. Money market is the market where the financial instruments whose age is 1 day to 1 year, they will trade in this market. So this market is for less time. The maturity of this instruments is very less. Apart from that, the liquidity of this product is high. So that is money market. Capital market, here the maturity of these instruments is more than 1 year, and especially they belongs to long term instruments. In money market we will trade short run instruments, and in capital market we will trade long run instruments like equity, preference, debt, like that. Okay. So apart from this, we have one more called gilt-edged market. Gilt-edged market was earlier a part of money market, but then it has been diversified into a separate market called gilt-edged market. Especially the bonds or the instruments related to the government will trade in this market. So that's the reason it's considered as gilt-edged market. And commonly when we go across these markets, we have to study about two more markets called primary market and secondary market. Primary market is called issues market, whereas secondary market is called trading market, that is stock market. So financial market, especially we are going to learn about money market and capital market. Apart from this, a special category called gilt-edged market is there. So they are going to issue in the primary market and will be traded in the secondary market. So this is about financial markets. Then comes financial institutions. So in financial institutions, we have banks, non-banking financial companies, and financial regulatory. As you know, commercial banks, regional, rural banks, all the banks, foreign banks, whatever it is, so they will come under banks or the banking sector. And NBFCs, that is non-banking financial companies, especially operated to perform the activities of certain banking activities except deposits. So that is non-banking financial companies. So we are going to see about financial institution, non-banking financial companies, and then financial regulatory. In financial regulatory, to regulate banking activities, the regulatory body is RBI. So RBI will give the guidelines to all the banking operations. For trading activities, SEBI is the regulatory, and for insurance activities, IRDA is the regulatory authority. So in regulators, financial regulators, they'll help us or they'll facilitate the flow of money in a convenient way. So the regulatory body includes RBI, SEBI and IRDA. Then comes financial instruments. So financial instruments, we have long term, medium term and short term. Long term instruments whose maturity is greater than 3 years. Equity, preference, okay, long term, debt. So those instruments are long term instruments. Medium term, whose age is greater than 1 year and less than 3 years. If at all you are issuing a debt or giving a loan for 3 years, tenure, so that will come under medium term. For any reason, if at all we are giving, means if at all we are going for a swapping for 2 years, that's a medium term instrument. So all these are financial instrument. In short term instruments, its age is less than 1 year, 1 day to 1 year, like call money market, commercial paper market, certificate of deposits market, bill discounting market, all the money market instruments will trade in this short term market. So all these instruments, financial instruments, are three types: long term, medium term and short term instruments. And then comes financial intermediaries. So financial intermediaries are the middlemen who will help the activity of all these, means financial services activities, are facilitating the instruments to flow in the market. He will be the facilitator, middleman of financial system. Like you have underwriter, registrar, satellite dealers, brokers, or members of the stock exchange. All these are the financial intermediaries. They'll help in other sector activities. So this is about organized sector. Apart from that, Indian market has also got a unique feature, unorganized sector. Almost 40% of untapped money is in the unorganized sector. So this unorganized sector is also considered as indigenous banking or indigenous banking, or the people who will do this, they are considered as indigenous bankers. Especially you will have money lenders, pawnbrokers, traders, local banks, etc. So this is about your Indian financial system.